Hey guys, so none of this is financial advice. Please don't research. I'm going to get right into this video. Everything I've said is an opinion at best and a joke at best, okay? So I've constantly been wrong and my opinions are constantly changing as new information comes out. So with that being said, if you watch my two previous videos, I talked about how I think the United States and China are generally on good terms. They're friends. They are interconnected at levels that can never be disconnected, and it benefits everybody if these two countries do well. But at the same time, you need to have reformation structurally and economically to accommodate the developing global economy. So when you look at when you look at a country like China proposing a $1 trillion trade deal, this means much more than like if China or South Korea or is going to invest in the United States. This is because the value is not measured in like $1 trillion. It means much more, like that isn't really accounted for. So if you look at like the TikTok deal, for example, I think it was like 10 to 20 billion dollars only. That was the deal. But I mean, TikTok as a business might actually have more value depending on how you look at it. But there could have been backdoor deals. It could have been a way to create further deals in the long run. But I think the United States and China generally have backdoor deals all the time, and they have discussions on a daily basis. So when I look at things like APEC, it's more so of a symbolic thing, because I think they might say, oh, Xi Jinping and Trump are meeting today, but I think Xi Jinping and Trump have probably been talking, and along with political elites and business elites for I don't know, in the past 10 years they've probably been talking regardless of who's in office. So the United States might have numerous factions within its country, within its government and political and business elites, but generally they all kind of head towards the same direction. So I think the world's heading towards one direction, and you just can't change it no matter what. There might be hiccups and volatility along the way, but the United States and China need to get along. But you can't just have all these peace deals and trade deals made overnight, because China and the United States need to make economic and social changes and reformations to accommodate new markets being opened or more trade deals being made. So what I mean by that is you may have to use the US financial markets to subsidize a lot of the older demographics that rely on pensions, 401ks, appreciating asset bubbles like the AI bubble or housing market bubble to create the wealth effect. And yeah, but it's also a huge burden on the working class of today who cannot afford to get into these asset classes that well. But you also need to make trade deals between China and the United States so that all these emerging economies and all these like third world and second world economies can start boosting up production, have access to cheaper credit. Maybe there's an increased money supply as well, and lower trade barriers, so everyone can have a win-win situation. At the same time, you can't do this overnight. It takes time. Everyone needs to be on board. And so a lot of these movements, when it comes to macro basis, has to be done in sort of long periods of time, not overnight. I mean, in a small business, you're much more flexible, right? And drastic changes can be made overnight. But if you're imagining the global economy, then these structural changes take like, I don't know, 1, 5, 10 years plus, right? And so when Trump became president in 2016, that's even around that time is probably when the tariffs were officially made onto China. That's probably when the Chinese government made it official that, it had to start offshoring production. It has to start changing how supply chains work, maybe encouraging its own economy to become more globalized as well, rather than like have a monopoly on certain things, mainly because it does benefit everybody, right? You don't want China owning all the manufacturing and supply chains, because, well, you create economic deserts in other countries that want to move up as well. But if you share in the production and you share in the supply chains, then everyone wins. And same with the United States. The United States did this too when it sent its production to China or Vietnam or Latin America or Mexico or Canada, things like that, or even Africa now. So it's basically as countries move up from like third to second or second to first, you want to share in the production and the means of production so that everyone wins. And at the same time, you want to increase the demand side for all of these goods as the global economy increases as well. So a lot of the times, things unfortunately can't be done overnight. So you see a lot of like economic and political hardships. And a lot of the best ways to do that, rather than be like, hey, we can't make these structural changes overnight. Like we can't repurpose our farms in the Middle East here overnight to become less export driven and more domestic consumption. We can't revitalize our canals or towns overnight. It's going to take like, I don't know, 5 to 10 years. We can't promote businesses from the West Coast to move more in the mainland to revitalize the states more that have been suffering like the Rust Belt overnight. You need to make policies that gradually allow for economic stability and social stability to eventually make these changes. So it generally does take a long time relative to like the amount of years we live. And then you also need to consider the demographics too, right? So yeah, you kind of have to wait for people to die, or just like demographics and economic and political rules to change as well. But when you have things like the United UN Charter and international frameworks, along with checks and balances from nuclear weapons and mutually assured destruction interconnectedness between the global economy, it makes and forces people to play the same game, even if there might be hiccups and volatility. When you look at things like the tensions in the Middle East, for example, these things have been going on for, God, decades. Yeah, probably a very long time. And we saw OPEC have problems, and, well, almost around the same time Japan and the United States were having the current, like, its own issues of integrating a rising Japan into the same markets that the United States dominates in. So, you may not have the Plaza Accord, but things can be done differently. So rather than Japan dominate the global economy, or rather than China dominate the global economy, right, this part of China, dominate the global economy through export markets, through overcapacity, as Janet Yellen would say. I mean, it's more about economies of scales and efficiency, but rather than that happening, you can have the global demand for those goods and services become more by developing third world and second world countries, along with developing domestic consumption and financial markets. And if you want access to Western capital, then you can't force a Plaza Accord on China, right? You can't force China to do Plaza Accord, but you can encourage China to invest $1 trillion or so into the United States and Western markets. That way, the United States isn't in a position where China just dominates the global economy and like the exports. So let's just say China does invest $1 trillion and they increase their financialization to have like more mature stock markets to help in these areas and to help with like global financing and things like that. Just like Tesla, you can have BYD factories in like Michigan or Wisconsin or Iowa, and then you can change the farmings here from like export driven soybeans. So like you don't have to export soybeans from the United States all the time. You can change the seasonal crops into things that can promote domestic consumption instead, and allow other countries like Brazil or Argentina to export soybeans to China. And let's see. Yeah, you can have countries like Argentina or Brazil export a lot of their agriculture to China so they can boost their economies as well. And you can allow the United States to focus more agriculture on domestic consumption and trade as well from foreign other countries as well. But in return, China can bring like its BYD factories or cattle or NEO or NIU or all this Alibaba, for example, to revitalize things like the Rust Belt, which will help promote capital inflows into and revitalize towns and states that have been struggling with like opium addiction due to like economic hardships and mismanagement in government. And at the same time, this will be deflationary, right? So to have Chinese and United States joint ventures and partnerships will be deflationary. It's probably possible that the United States will still act as the banker. So do I see like a BRICS devaluing or a BRICS takeover of the currency? Probably not, for now at least. I mean, you'll probably be seeing less arbitrage that the United States can do onto other countries through like petrodollars, or you can't see the United States use its central banking system to exploit other countries as easily anymore, and this will become increasingly apparent. You can't have neo-colonial practices, which is just a byproduct of the global developing economies. But instead of the United States forcing Japan into a Plaza Accord onto China, maybe China can have these joint ventures that unfortunately China will have to eat some of these losses. So like like here's an example. China might be able to build Teslas at high profit margins and high profitability because of the supply chain efficiencies and like expert labor and more affordable labor and like more expertise and things like that. And China can ship these things to the United States and bring in a lot of profits, for example. And maybe let's just say that like let's just say their profit margins are like 40% on a vehicle, which it's not that high, but let's just use that example. Okay, let's just say like every time China produces like a vehicle, their profit margin is 40%. Okay, maybe like Michigan, with the way the economy is and like the dollar is and the cost of labor is and like the immature supply chains are and how inefficient they are, and just like Canada and Mexico, just everything in general makes the profit margins like -5 to -5 to like +5 depending on like the weather. Okay. Like that's how fragile it is. China may have to eat some of that loss, but in return China can have access to the Western markets. Like the United States and like all its Western G7 allies will lower tariffs if Japan can have Nippon Steel access, and Japan can have access to the supply chains and have Chinese joint ventures. So like everybody wins. So China has a lot of export and a lot of like economic static or economic force, and everybody needs to soak that up to make sure that like everyone can sort of be a winner, and everyone can be, right? So yeah, like the United States and Western markets may not want Chinese firms and businesses to start exporting into like Western markets to destroy domestic manufacturers and businesses. So they'll have like tariffs temporarily until things are arranged and deals are made. But these temporary tariffs can be changed over time. So yeah, a lot of times it's more of a waiting game. So in exchange though, even if they have to take like a 5% loss on an unprofitable BYD plant in the United States and Michigan, but it could be profitable depending on like how you do the accounting, or like how you do like how the financial system is a little bit I guess bejiggered, right? You can figure out how to do that, right? Maybe you can play around with like monetary policies. Maybe China can have access to like Western markets in Canada, the United States, and things like that, and it can make up its losses, and then net whole BYD would be profitable because it has more access to Western markets. So like things like that. Let's just use an example of like a more company I'm more familiar with, like with Neo, for example. Let's just say Neo is profitable by 2026, I don't know, or 2027. Okay, what China could do is that they could build a Neo plant in the Rust Belt, for example, and then ship all these Neos through the United States and infrastructure as well. The company may struggle to be profitable in China, but if it has access to Western markets, and Western markets kind of do a backdoor deal to guarantee a X amount of sales, X amount of infrastructure, then you could see like capital inflows into the stock or company, and you can see maybe the company can be profitable through not cooking the books like Tesla, but Tesla did some interesting accounting practices like many companies in the United States that, I mean, just my humble opinion, I'm not saying I'm right, but to somehow manage profitability. And by having access to Western markets, even if you had to take some losses on, there's a lot of wins that can be had from that as well, just by increasing the access to markets that have higher pricing power and higher spending power. So everyone wins in that scenario, right? I know some people would think like, well, that's so risky for China to invest like $1 trillion. Okay, that's true, but if you lower tariffs and you allow Chinese businesses to list on things like the NASDAQ, and you promote United States firms to use their indexes or government pensions or school pensions to buy into Chinese equities and Chinese assets, then you show right there that you are in a mutually assured win-win cooperation or a mutually assured destruction cooperation. So if you start seeing changes like that, that's kind of like when you have some kind of like idea that countries are more willing to take on risk to each other. If you feel like, oh, okay, so why should NEO or BYD build a $2 billion factory in Michigan? Can't the United States just confiscate it like Nexperia? Yeah, that's true. They could. But if China uses like a NEO or BYD ADR on the NASDAQ, for example, and tariff rates are lowered, or tariff rates are not lowered until things happen, but interest rates are lowered, so more capital flows from out of the AI bubble or slows down the AI bubble and moves into companies like NEO or Alibaba or Chinese stocks that are listed on like Western markets, then NEO, for example, could raise like $4 billion or $2 billion in money through, or $2 billion in investments through Western capital markets in order to build a factory in Michigan using mainly Western financing. So even if that factory was seized, yes, China and NEO do lose like infrastructure, their business, research and development, things like that. But a lot of that was de-risked because a lot of the resources were built up through Western capital markets being primarily what funded that $2 billion capital raise. Western supply chains like steel, Nippon Steel or whatever, and laborers that built the factory are mostly in the United States. So yeah, China might lose some things, but a lot of that was de-risked because they were able to raise money from Western capital markets instead. So if the United States doesn't do this, then China will probably just continue dominating the global economy. So China doesn't need the United States and Western markets. It's really good, but if these Western markets don't open up trade with China, they'll still do trade, but they'll just do more trade with like Russia or Africa or the global south, and the Middle East and other parts of Asia and build economies away from the Western markets. So it may be beneficial for the United States to eventually work out a trade deal with China. So because of that, I don't really know if a lot of the news and a lot of the headlines we see really matter. We kind of have to use those to justify or like verify things that we think, but we may have to understand the world and global developments through our own understanding and try to see if our convictions are right or wrong. I mean, you could speculate that there's different factions that will help different industries within the United States, but I think even if you could look at different factions, it's much easier to just look at the country as a whole, rather than think like, oh, the Democrats or Republicans aren't a one party system pretending to be two, because then it just gets a little too confusing. It just, yeah. So, does the phase one agreement matter? Yeah, it does. I mean, some things are pretty important. When you look at like financial services, I think that I don't think I really want to find I don't really want to find everything. But yeah, I know the United States wanted access to like Western markets. They wanted certain types of like agriculture to be purchased. I don't want to look through this all right now again. But so let's just see. Yeah, this $1 trillion investment bid is a big deal, but I think that a lot of investors already kind of saw this happening anyway. The phase one deal matters to give us like a framework of things, but I won't use that right now. I guess I'll take a look at this later and I'll get back. This is a very interesting page. Don't need this. So there's a benefit of having large mega caps that are holding up the markets, because you can use it to create the wealth effect for the stock market. You can also have more economic efficiency through by having large companies, but then small companies fill in the gap and then create efficiencies in some ways too. And small businesses are one of the largest employers in the United States, so it kind of acts like a little pebbles that seal up the holes here and there that large boulders like Amazon or Walmart can't manage all the time. But you generally want large caps can handle or even benefit sometimes from protectionist policies, but a lot of the United States, especially smaller businesses that have lower profit or thinner margins, they need freer trade. They need a reduction on tariffs. They need easier borrowing costs. And a lot of companies that are really debt driven, a lot of companies that rely on debt, a lot of companies that need to refinance debt, a lot of companies that need to have trade barriers lowered would benefit from a mixed bag between like lowering interest rates and lowering tariffs on China. So I noticed that Jerome Powell didn't. Oh yeah, so just with Taiwan too, like the way United States and Taiwan and China are currently structured can be beneficial to all three of them at this current moment in time. So yeah, there could be reasons. So the Federal Reserve did cut rates today, I believe, but they don't know for sure if they're going to cut in December. And I think a lot of this has to do with Trump. Now, some people might say that, or some people might question that. Okay, should the Federal Reserve wait until something in the economy breaks, or should they wait for tariffs to be lowered and trade deals to be made and become, unfortunately, political, rather than have this dual mandate obligation? Well, I guess it could still fulfill its dual mandate of cost of living and job growth and employment. So let's just look at the dual mandate. I'm sorry, I gotta make sure. So the dual mandate of the Federal Reserve is to, okay, price stability and maximize employment. Okay, so if you want to maximize employment, you want to lower interest rates and borrowing costs, but you want to also have stability by not having the inflation run too hot. So what you can do instead is that if you want to maximize employment, lower tariffs so we can have more access to Chinese goods, since most of our jobs are in like service sectors and retail anyway, and services. So if you can make a trade deal with China, if you can promote joint ventures and Chinese investments in factories coming to the United States and creating partnerships, it benefits everybody. If you can promote all these things, lower tariffs that'll reduce cost of living. If you can bring Chinese companies over, so Chinese can have access to Western markets more easily, and the United States will have more jobs. If you can do those things while also lowering interest rates, then you can also maximize employments and help debt distressed companies, and also help companies that are working under new conditions of a stronger United States and China relationship to build businesses around that as well, which will help economic growth globally as well, because there's a larger demand side now that's growing. And so emerging economies in third and second world countries will open up their factories as well and run at more capacity, and their manufacturing plants as well, and things like that. So everybody wins from the United States and China working together. Everyone generally, for like the most part, wins. There's always going to be losers, but for the most part, everybody wins from the United States and China working together. But the reason why these things can't happen overnight is because people need to move, businesses need to move and adapt, economic and social structures need to change, populations need to age out and move, things like that. So it generally takes a much longer time. So I think a lot of the federal cuts can, in the next year, depending if Powell is here or not, will depend heavily on the relationship between the United States and China. So I'll probably go more into other things as time goes by, maybe later today, or I'll follow up with Xi, or whatever I can think about. But I think, I think a lot of these factories and a lot of these Chinese companies, they would be profitable, along with a lot of United States companies. They would be profitable with like more interconnectedness, lower borrowing costs, and more access to each other's markets, along with an example would be, if I think this company, New Technologies, I think they're producing like 500,000 or 600,000 electric bikes or something. Was it? I feel bad if I get this wrong, so let me just look it up. Okay, so in the third quarter of 2025, New sold 465 units. So I think I read in the earnings report that even at the international market, okay, so see how the international markets year to date are declining year over year? I think that's what it was. I'd have to look. But the Chinese domestic market has grown 70%. Okay, so if the domestic markets in China and consumption is increasing to offset a lot of the international markets decline, the factory is still running inefficiently, because if the factory can produce, I don't know, let's just use an example, okay? I'm not saying it's right, but let's just say an average Chinese factory can produce up to like 1 million units. If it's only running and there's only producing 600,000 units, but the factory has to stay on, then 40% of that is not really being used. Now it's not exactly like this, but profit margins and operating costs can be justified if the overall demand increases as well. So I think, it's actually really interesting, but I actually see a situation where you could see the global economy do really, really well once China and the United States makes like a deal. Because well, if the profit margins and if you want to increase like the overall profit margins, lower costs of operation, higher demand, and higher ability to price things will generally lead towards like higher profit margins. I see a situation where that's happening, where the overall global economy, the worldwide economy, goes through another like growth phase. I think that's why some people think there's going to be a commodity super cycle or whatever they say. I don't know. I don't really know too much about that, but I think, without getting too much into it, I think that a lot of things are looking towards actually global growth growing in a positive way, that'll be reflected on companies in a more positive way. If the United States does lower rates, which will encourage other countries to lower rates as well, and lowering tariffs as well, which will benefit everyone as a whole, you may need to the United States needs to handle its AI bubble, because even if it has its purpose to act as a UBI to prop up the financial markets and prop up the wealth effect, you may not want all the money to flow into the AI bubble. And honestly, I think firms, businesses, and institutions, and retail investors and things like that, they may find that under lower borrowing costs and tariffs being reduced, that the AI bubble is just way too overvalued, and there's more value to be had in companies that benefit from lower tariffs and lower borrowing costs. So yeah, with that being said, I hope you have a great day. Now, this is financial advice. Please do your own research. Thank you.